you might expect, or even hope, the news flow is scheduled to dry up a little as Christmas draws ever nearer. After last week's central bank bonanza, we have a fairly quiet week ahead, at least on paper, although the Bank of Japan is due to announce its latest monetary policy decision on Tuesday, the 20th of December. According to the website www.cbrates.com, we've had over 330 interest rate increases around the world so far this year, but Bank of Japan Governor Haruhiko Kuroda, well, he's not moved a muscle. The BOJ has kept its headline interest rate at minus 0.1% since February 2016, and Governor Kuroda has given no indication that will budge anytime soon. Nor has the BOJ officially adjusted its quantitative and qualitative easing, or QQE, program, whereby the central bank is committed to capping the yield on the 10-year Japanese government bond, or JGB, at 0.25%. Under QQE, the BOJ's plan is to inject around 80 trillion yen a year into the Japanese economy. That is equivalent of £480 billion a year, and in terms of the assets held, the BOJ's balance sheet is still pretty much near record highs. Now, that 0.25% yield on the 10-year JGB has come under duress a couple of times in 2022 as inflation's hit 3.7%, the highest level in Japan since 1991. But using QQE, the Bank of Japan has so far fended off the bond vigilantes each time. If that 0.25% threshold ever gives way, and the price of the Japanese 10-year bond falls as the yield goes up, then that could be a signal that bond vigilantes really do think inflation's here to stay, not just in Japan, but worldwide. So the battle between the Bank of Japan and the bond market is well worth watching, with that 0.25% yield the key battle line. Now, Governor Kuroda's second term expires in April, and he's apparently happy to step down then, so maybe a change in governor could be needed before Japan starts to move with the more hawkish policy times elsewhere. On the home front, there are just 2 scheduled items of corporate news in the coming week, although do watch out just in case someone tries to sneak through a profit warning in the hope that nobody's looking. It's been done before, and Friday the 23rd might just be the day a company tries it on, especially as that's a half day, so keep your eyes peeled between 12 o'clock and 12:30 in particular. Meantime, the 2 planned items are as follows: a trading update from oil equipment and services specialist Petrofac on Tuesday the 20th, and a trading statement from distributor Bunzl on Wednesday the 21st. Now, Petrofac's had a difficult year, as its share price swoon would attest, thanks to problematic legacy contracts and the lingering after effects of a serious fraud office investigation that concluded in 2021. For all of that, though, it may be that Bunzl causes the bigger fuss in the week ahead, not least as it is a member of the FTSE 100 index. Bunzl shares have largely paddled sideways in the past 12 months, but that does leave them still near their all-time high. That in turn may be due to Bunzl's business model. It supplies the things that other firms need in order to do their business and cannot do without, even if they're not items they actually sell to their own customers. For example, Bunzl supplies disposable coffee cups to cafes, food wrap to supermarkets, hard hats to builders, cleaning materials and bandages and rubber gloves to hospitals, and so on. The required nature of the products it provides may also shelter Bunzl from the vagaries of the economic cycle, at least to some degree, and also provide the company with pricing power, and that is a key ingredient during inflationary times. These facets have enabled Chief Executive Officer Frank van Zanten to unveil some strong numbers so far in 2022. October's third quarter trading update revealed that sales between July and September had risen by 18.8% year on year, by 8.7% on a constant currency basis, and by 6.1% using constant currencies and excluding acquisitions. As a result of all that, Mr. Van Zanten stuck to his guidance for, quote, very good revenue growth in 2022, and he'd started the year by forecasting moderate growth, by the way. After looking at the headline sales number, analysts will then dive into the mix. Food service and retail sales were up 21% on an underlying basis in the first half, and grocery sales by 11%, while the cleaning and hygiene businesses suffered a 4% drop, owing to a decline in COVID-19 related activity. In a way, long may that continue. Mr. Van Zanten also flagged inflation as a key driver of sales, and he noted strong revenue increases in Europe, the US, and UK. But in the US, he did note negotiations with one key customer was still ongoing, so keep an eye out for any commentary there. Analysts and investors will then benchmark the statement against the one other piece of guidance that Mr. Van Zanten's offered for 2022, namely that the operating margin would come in above historic averages and only slightly below 2021's mark. Remember, that year benefited from strong COVID-related activity. In the first half, the underlying operating margin was 7.3%, in line with the overall outcome in 2021. That should be it so far as this update's concerned, as it should be brief. But if the FTSE 100 member does comment on pre-tax profit, analysts expect a 20% jump in the headline figure to £689 million for 2022. However, they then expect a slowdown and a 3% advance to £706 million in 2023. Bunzl is likely to leave any comment upon dividends until the full year results, which are normally coming out in late February, but do watch out for an update on acquisitions. Bunzl's traditionally used bolt-on deals to supplement its organic growth and complement its business structure. The firm has spent over £500 million on 14 acquisitions in 2021, and it's already struck 7 deals in 2022, the last of which was Enviropack here in the UK in early autumn. I hope that you and your families are all well and in good spirits. Thank you for watching, keep warm, and I look forward to seeing you next time.